Okay, we're going to fit in this bit of news because everybody on the Discord has been talking about it. Trading 212 this week. What we were going to answer someone's questions, but we're going to save that for another week, I think. But Trading 212 released a new list of caps on how many shares or how much in value you can own of certain shares on their platform. What are we thinking about that very, very quickly, just so we can put it out for a short highlight reel and Kasper can make some... We'll do our scary face now for YouTube. Get ready. 3, 2, 1. Shock face. There you go. Right, Kasper can do that bit.
I just can't.
What do we think? I don't think Steve W's been awake long enough to read this one, but Steve, you must have something.
So my only guess is that it's because we have trading settlement in the world when it comes to trading things. It's usually trading 2 trading days plus 1 extra for settlement. So trading day T+2 they call it. I would assume that trading 212 are fronting the cash for us, which is why we have liquidity straight away to go and buy something new. And I would assume that's why they're limiting sizes. So for people who haven't seen it, you should have got an email by now. But essentially, on most big stocks, you've got about $1.25 million is the maximum amount of stock that you can hold in most of the big shares. And they want you to place orders in less than $250,000 sizes. So they've given you a table. A lot of these things in here, like they'll look like it says Coinbase, but they tend to be the lower and with the low quantity, and they tend to be the leveraged versions of them. So just pay attention to the ticker when you're looking at them. But it's a strange move, and I'm sort of remiss to criticise them, although we will if it turns out that it's a crappy policy that we hate. But they haven't really explained why they need to do this yet, and I would hate to speculate. So I think I'm gonna pass this one over to you guys and see if you guys have heard anything. But I'm waiting probably for next week before the barrels are loaded.
I'm going to speculate. I'll do this very quickly. I know we weren't going to go into much detail on this because we don't know the full ins and outs of the story yet. But I'll speculate. I think there's too much trading going on with the leverage shares and the double X leverage, double times leverage, and they want that on their CFD platform, and that's having these limits will force people more onto CFD to trade, and therefore getting them more fees. Basically, at the moment, if you're trading on the leverage shares, you're just giving leverage shares loads of fees, and you're not giving it to Trading 212. So there's one. That's not what I think, by the way. I don't know what I think because I don't know enough information, but I'm happy to give you a bit of speculation there. That's what the fire in the background and the shocked face would be, I think, if you did the video on it that one of those days. But we don't know. Lots of people coming out on the forum as disappointed, which is, that's just one of the things. I noticed the same thing as you. I think more of it is to do with the ticker symbols that are based on the LSE rather than the NYSE.
The OTC.
But we don't know that for sure yet, so we have to wait for that one. And they haven't been very transparent. They kind of said something along the lines of, it's just our risk management strategy, which rang alarm bells for me, if I'm honest. I was like, okay, this has got to be something to do with market volatility. There's no doubt about that. Is it to do with fronting the money, or is it to do with the fact that they won't have enough money if there's a mass exodus? I don't think the latter's true, but I'm not sure. And that's where I'd go with that.
Interesting. So I'll just pick up from there for a moment then. Last week I said, with all of the kind of platforms and brokerages, we were talking about free trade at the time, I guess you need to work out that these companies are going to make money somehow, and you need to try and find one that makes money in a way that you don't really care about. So it might be the case that you don't mind paying a commission for your investments or trades or whatever, in which case Hargreaves Lansdown is probably fine for you. It might be the case that you don't mind paying a monthly fee, in which case free trade probably for you. Might be the case that you don't mind whatever is going on here and your shares being lent out and whatever else, in which case Trading 212, the place for you. Based on what I've heard of this so far in the last, 3.5 minutes while you were telling me about it or so, I can't see this is likely to affect me. The numbers you were talking about are just far too big, for one thing. Even on the bottom end of things, I'm sort of surprised that if it were the case that this is to try and push people towards their CFD platform, I wonder whether some lower numbers might be more helpful with that. I'm not sure how many people are flinging around sort of north of 250,000 in
Oh no,
leverage
we're
bets,
saying
but maybe.
things like the famous things like Argo blockchain. Argo blockchain has two separate on the OTC and it's London and OTC, isn't it? And it's quite low. I think what was it, Steve? About 13,000.
Yeah, something like that. About $12,500, I think. Just interestingly, Steve, I'm just having a quick look at the list now, see if it would affect you. It will. You won't be able to afford a Berkshire Hathaway A share because the maximum order on that is $250,000. Of course, Berkshire's nearly double that at the moment, so you'll need a new broker, I'm afraid.
So is it the case that I can't own that, or I can't buy it all in one go?
You can't buy it all in one go.
Well, right. We don't know. Well, yeah, you can't buy one share of it because it's a maximum order.
That.
But the value amount, there's also a value amount as well. So there's a certain amount
you can own
of it.
Three. You can own three.
Yeah, yeah. So but then that's chicken and the egg question after that, because if you own whatever stock, I think AbbVie was in there for 1.5 million or 1,250,000. So if you owned 1,100,000 and the stock appreciated, would then you be banned from buying any more at that point, or would you be banned prior to that? So there's a lot of odd things, but God, I don't know who the person out there is owning 1.5 million of AbbVie on Trading 212 anyway.
So the general message then is just don't buy any stocks that go up, and we'll avoid this problem, which is a strategy I've been employing for quite a long time now.
Yeah, welcome to everybody to the podcast.